Hey everybody, this is Jim at SP500chart.com. It is about 4:40 on July 18th, 2013 here on the East Coast. We're going to take a look at the chart of the S&P 500 using some of our time-honored techniques to understand modern markets. Before we do that, I need to read this to you. I'm going to try to do it in one breath again. Let's see if I can do it. The website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, with that out of the way, let's take a look. Peering at the 15-minute chart, I think it's safe to say, when in doubt, up. We had a few reasons to think that the market could bounce off of that 1687, which was the intraday high back from late May. We made a couple runs at it and came up short by hitting about roughly 1685. But today, the move up over that intraday high, closing at 1689, which is a new S&P record. Now, don't get me wrong. I'm not going to tout all this stuff about, the markets are closing at record highs. You know they are, and we know that. But I'm not going to pump that idea, because I think if you do that, you can end up being not as objective as you ought to be. So what I'm going to say is this: a nice day, up about 0.5%, and it held it. This is our extended neckline, by the way. Let me show you that. If we take our neckline from back when we had our last head and shoulders top right here, and it's kind of a funky looking top, but it is a top. And you can see it broke down, made its minimum target, which by the way was about 1572, got down to the 1560s, low 1560s in fact, and then started in this channel back up. So you can see that this extended neckline is the line that was attacked and briefly pierced today. Now here's the deal. Back in earlier June, after this pattern had broken down, we almost made the target from this pattern, from the head and shoulders top, almost made the target in that first week of June. You can see we had a back test here. Okay, clearly when we had that initial dip underneath this neckline, that did not meet the target. So we came back to the neckline, almost met the target, came back to the neckline, then finally we fully met this inverted head and shoulders target. Why am I mentioning this now? Well, because now that that target has been met, I don't know how much we can necessarily expect this extended neckline to provide resistance. I think it's a very good rule of thumb that while you're in a position where the target has not been met from any kind of head and shoulders pattern or inverted head and shoulders pattern, then you look for the neckline to provide either resistance or support depending upon which variety, top or bottom, you're dealing with. So what I'm saying is I think it's entirely possible for us to continue this trek up. If that's what the market's going to do, I don't think this neckline's going to stop it. You can see we just got above it a little bit. And the other thing I want to show you is we're clearly inside of our, I'm going to call this turquoise or teal, whatever you want to call it. Let's call it turquoise. We are clearly inside our turquoise channel that's been working since the next to the last week in June. So I'm thinking if you're looking at this and you're saying, gee, you know, when should I sell? If you're short term, if you're just a trader, I'd probably say you know, stand pat until you see this line break. But even if that line breaks, I don't think the market's gonna get crushed. I really don't. I think this is gonna go for a bit. And one of the reasons I think that is the fact that we had a resistance line kind of right at about this 1655-ish level. And you know, we were looking for maybe an inverted head and shoulders pattern, but we ended up not getting a right shoulder, but we got a breakout. I'm thinking this line would probably serve as a decent area to expect support. And if that breaks, this descending orange line would be an excellent candidate for support. So basically, while we're in between these two turquoise lines, and more importantly, while we're above this lower turquoise line, I think the best thing to do would be just to hang with it and enjoy the ride. So guys, that's your video for, let me show you one more thing real quick. This today we had a little bit of up and down movement once we had that initial burst of buying activity, and you can see that at least on this 5-minute chart, it appears that we are making a symmetrical triangle. And we'll take a quick opportunity here. Let me make that a little bit lighter. There we go. Take a quick opportunity here to remind you about symmetrical triangles. You don't know which way they're going to go until they go. That's rule number one. But rule number two is they have a tendency to serve as a continuation pattern by a margin of about, probably about maybe, I don't want to say quite 2 to 1, but let's say 60, a little bit better than 60% of the time. It seems that when you have an upwards move and then you have one of these little patterns, that ends up playing out as a continuation pattern. If that's the case, let's watch this tomorrow. And again, whatever. I think even if this breaks down, if this were to break down, I don't think it's got enough of shape to it to jeopardize this lower support line all by itself. I'm not saying this line couldn't get taken out, but this isn't some big, huge pattern here that implies a 3% move in the S&P. It in fact implies about a 0.3% move. So for what it's worth, it looks like this may be a little bull flag in the making, but you will know for sure if it breaks to the upside. So there. Now I'm done with the video for July 18th, 2013. I want to thank you for taking the time out of your day to watch this, and I want to thank you especially if you're watching this on the 18th, because that means you are a subscriber to SP500chart.com. I want to thank you for your subscription. I sincerely hope that you're doing two things. A, that this is challenging you to look at charting in a new way. And B, I hope that you find this helpful as you take these charts and these trend lines and you factor all of this together in what your trading style is already. I hope this is a fit for what you do. But don't take my word for anything. You need to make up your own minds and you need to do your own research, as we all well know. Thanks. Take care.